stock markets all seem to be about the Magnificent Seven right now, or maybe the famous Five, given that Tesla and Apple are struggling to keep pace with Alphabet, Amazon, Meta, Microsoft and Nvidia. But investors with long memories remember that similarly catchy name tags such as the Nifty 50, the bunch of the 1970s technology heavyweight Burroughs, Univac, NCR, Control Data and Honeywell, the BRICS, Brazil, India, Russia, China, the Mints, Mexico, India, Nigeria and Turkey, and even FANG, or Facebook, Apple, Amazon, Netflix and Google, as some of them were then, well, they all came, shone, and then faded and eventually fell from favour, at least to varying degrees. It'll be interesting to see how long this cycle plays out for, and how long it takes maybe for people to get a bit bored. But in the meantime, some investors may still wish to interest themselves in other more prosaic sectors, and few could be seen as stodgier than utilities. It's a big week for this sector in the UK, as a trio of firms that hail from it are due to report. Water suppliers Severn Trent and United Utilities will publish trading statements for their fiscal third quarters on Wednesday the 14th of February, and British gas owner Centrica will release its full-year results for 2023 on Thursday the 15th. You may, I admit, already be looking at your watch to see when this will end, but the investment case for utilities is generally as follows. Relatively stable, predictable demand in oligopolised, if tightly regulated markets. A degree of insensitivity to the economic cycle, something that investors may seek out in the event of an economic slowdown or recession, although Centrica's business has a lot more moving parts to it than say the other water and wastewater specialists. And also relatively predictable cash flows, which can in turn turn into juicy dividend yields. And in reality, utilities need to offer a decent yield as compensations to shareholders for the risks involved, given that earnings growth is likely to be fairly modest over time. This chart shows how the forecast yields for the current financial years for all three of these utilities compare to two important benchmarks: the prevailing rate of inflation and the risk-free rate, for which the UK 10-year government bond or gilt is a good as benchmark as any. Now, in crude terms, utilities are actually often seen as so-called bond proxies. The rule of thumb is that when bond yields are falling and prices are rising, utility stocks do well, as their yields are relatively more attractive, and they do less well when bond yields are rising and bond prices are falling, as utilities' yields look relatively less attractive. However, more than a decade of record low interest rates means that the rule may have lost a little bit of its relevance. Whether any of those features appeal or not and fit with your overall investment strategy is something that only you can decide for yourself after detailed research. Although three other trends are at work at the moment too, certainly when it comes to the share prices. Water utilities are preparing for the AMP8 regulatory cycle that runs from 2025 to 2030. And that will set both pricing and require substantial capital investment, the latter amid the furore over leaks, floods, sewage overflow and releases. Severn Trent raised £1 billion via a rights issue in 2023, and both this company and United Utilities are accelerating capital investment at the end of the AMP7 regulatory cycle as they prepare for AMP8. Investors will be watching for updates here, but so will infrastructure and engineering specialists such as Costin and Renew Holdings as they tender to win projects for these major deals. Secondly, watch for the failure of many energy suppliers, because that's left Centrica with a far fewer number of competitors and a much stronger position in one of its key markets. The FTSE 100 firm's profits have soared as a result, helped by also surges in oil, gas and wholesale domestic energy prices, and Centrica has ended a 2-year dividend drought and even started to buy back stock. Its 3 announced buybacks of a total value of £1 billion. And thirdly, public, regulatory and political scrutiny is becoming ever more intense. Centrica is paying a so-called windfall tax on its North Sea oil and gas activities out to 2028, while one of the Labour Party's first actions when Tony Blair became Prime Minister in 1997 was to impose a windfall tax on utilities profits, so the imminent general election campaign could, in theory, again see this issue come to the fore. One area where regulatory pressure may be easing, though, is heat pumps, where boiler installation specialists such as Centrica's British Gas may no longer face the threat of fines should they fail to meet heat pump production targets thanks to another policy U-turn from the government. In sum, capital investment, regulation and cash returns are the key themes across all three firms, while shareholders will need to keep an eye on all of the moving parts at Centrica, even if it's best known for British Gas. I hope that you are well and in good spirits. Thank you for watching, and I look forward to seeing you again next time.